They work fewer hours, they earn less. This is why disposable income is not growing in China. I think the biggest problem is really inside the domestic economy. And that is why you see real estate falling. The key risk is the financing of the US humongous fiscal and current account deficit.
Property sales in China are down 10% year on year. Domestic demand remains sluggish and tariffs continue to weigh. Alicia Garcia-Herrero from the investment bank Natixis is here to talk us through some of the challenges facing the world's second biggest economy. Welcome, Alicia. According to the Peterson Institute for International Economics, average US tariffs on Chinese exports stand at around 51%, while Chinese tariffs on US exports average at nearly 33%. Now, that's a lot higher than the figures of 30% and 10% that we read in the headlines. What kind of impact do you think this is having on the Chinese economy?
Well, China has been struggling with tariffs since the first Trump administration. The Biden administration actually increased tariffs further. And that this 30% that seemed to be a big victory, and indeed it was, adds up to the existing tariffs. So indeed, Chinese tariffs when exporting to the US are very high. China has gotten used to exporting, and notwithstanding the tariffs, let's not forget we had 8% growth in April, total exports, down 20% to the US. So yes, it's harming the Chinese economy, but China is finding other routes. Yeah, so exports increased massively to Southeast Asia, also to Europe for that matter. Now, is therefore the problem the tariffs? I would say probably not the biggest problem, if you ask me. I think the biggest problem is really inside the domestic economy. And that is why you see real estate falling. This is why you see many other issues. So tariffs are important, but they're not the bulk of China's economic woes.
Yeah, you mentioned there how tariffs are kind of choking demand for international demand for Chinese goods, and how Beijing, to keep the factories going, is urging exporters to turn inwards. Do you think that this is working? I mean, we talk a lot often about Chinese industrial policy and the way that it's a centrally planned economy and how it makes these decisions and everyone has to follow these decisions. But do you think this is working?
Yeah, it's a great question. It all depends on your objectives. So if your objective is to move up the ladder, increase manufacturing capacity, choke everybody else, it is working. Because just look at the recent truce between the US and China. Why did the US stop or at least lowered its tariffs? Because it just couldn't operate without Chinese goods. That's the reason. So if your objective is to have leverage against the whole world, it is working. If your objective is to have a balanced growth, sustainable growth, increase wealth for your citizens, maybe it is working less. And why? Because at the end of the day, manufacturing is increasingly automated. It is automated in China. We see youth unemployment. We actually see less of an employment problem, but it actually exists. And let me tell you why. Because in manufacturing, workers are asked to take unpaid leave. This is very common in China. So they work fewer hours, they earn less. This is why disposable income is not growing in China. But the reason for that is automation more than anything else, because industrial capacity is increasing. So you see, it depends on how you define your success. China's power, economic power, no problem, it's increasing. But kind of household power, or if you want purchasing power, it's not increasing.
And this is interesting, I mean, we often talk about, the role of the Communist Party in the economy and how it has this great surveillance system that can keep people in check. But some of these things surely must be translating into some kind of, I mean, could these be destabilizing effects of this kind of impact on growth?
Well, put it this way. I think Chinese, especially since Trump, feel that the rest of the world, rightly so in my view, looks increasingly dangerous, increasingly hostile, both to China, but even, among different constituencies. Yeah, so I don't know, think about Gaza, think about Pakistan, India, think about all of these conflicts. So while they realize that, yes, surveillance is increasing, that disposable income is not growing, that, the future is very uncertain, at the same time, they feel that the rest of the world is going worse. I mean, it's doing worse than China, or it's kind of diverging in every sense. So because they look at that in a relative term, I think we're very far from any social unrest, notwithstanding the economic situation.
Yeah, I suppose in some ways it could be, characterized as a struggle, and we know that Leninist parties like a struggle. So in some ways it could almost have a positive effect in kind of galvanizing support for the party. Do you think moving outside China, and looking the other direction, what impact do you think that this current truce that we're having, I suppose that's maybe the best way to describe it. It's hard to know because there's so much up and down with the tariffs at the moment and back and forth. But what impact do you think that this is going to have on the US economy?
Well, thanks God that tariffs have gone down, because the impact on the US economy is clearly very strong, both in terms of inflation, which everybody talks about, but I would actually also talk about scarcity of goods. And that is scary, yeah, for a very consumption-oriented economy like the US. Scarcity is unheard of, yeah, and you have products where China itself is actually imposing limits on exports to the US, because China understands that its leverage is all about not having anybody else to source a certain good. This is critical raw materials, but in some cases even medicines, even kind of consumer goods. So that gives China a lot of leverage. Thus, the US had to lower its tariffs. There's no doubt about it. Now, the US is now in a different problem, which is also partially related by China to China, although I would say more generally Asian investors are selling basically US treasuries to a large or smaller extent. We had latest numbers for China, 20 billion, Japan also 20 billion in sell-off of US treasuries. We saw the market really doing very poorly, also in the light of Trump's attempt to increase the fiscal deficit even further. So it's not only about China, let's face it. China wouldn't be able to do this if the US were not getting into trouble with the wrong policies. But all of that together means that the US economy now, I would say, is the key risk is not even tariffs anymore. No matter how much they lower tariffs, now the key risk, which is also China related, as I mentioned, is the financing of the US humongous fiscal and current account deficit. And for that, they need Asian investors as well.
Looking here, we're sitting here in Europe, and yesterday we saw from Council of Economic Experts that there's a 0% growth forecast for this year. So there's no impetus coming from Europe's biggest economy, Germany, for example. Where does all of this leave Europe? Is Europe in a good position to do something about maybe finding an accommodation with the US? Or is it going to move closer to China? Where is Europe in all this?
Well, as a European, if I were German, I would make this statement even harsher. I would say, my God, you are a big country with a big continent. How can we only discuss about who would we get closer to? Yeah, China doesn't say who am I going to get closer to. They're the center of the world, quote unquote. We Europeans don't think this way, and this is a pity. Not because I like ethnocentric views, it's because we have no choice. Yeah, because we need to use our leverage, which is our market, our size. So I understand that it's a painful moment for the German economy, but we have $1 trillion supposedly, coming additional fiscal stimulus, which I'm sure will be well spent because Germany needs to spend this money, and that will be a positive for the rest of Europe. But I don't think that's enough unless we come up with much more integration, because the whole problem we have is a very, very disintegrated single market. It doesn't really exist as such. So we can't compete with integrated markets such as China, such as the US. And that's our biggest problem. And it is in our hands to solve it. And let me tell you, neither the US nor China have any interest in us solving this problem. We have to realize that if we are not interested, nobody else will. It is upon us to take this decision. And so far, I can't see the political environment really pushing towards integration. We have a lot of political, let's call it diversity. I'm sure there's a worse word for that in my mind, but I will leave it right there. I just hope that we can leverage on our own strength, which is our market, integrated, big market.
Do you think there's enough understanding of that in Europe, for example? I mean, is there a sense here that we're seeing a resetting of global trade? Do you think this is a long-term, what we're seeing now is something that's going to be with us for a long time? Or is this something that's just going to be related to this one administration?
No, it's going to stay because it started in 2008. Let me tell you, I've done a lot of, analysis on the trends of, let's call it deglobalization, globalization. You can choose the word depending on, the variable you choose, how fast we are reducing trade, the integration of global supply chains, foreign direct investment, you name it. People-to-people movement. We are really we're bifurcating US-China. Think about tech transfer, less tech transfer. Let's think about people-to-people exchanges. That's absolutely clear. But we're also becoming more fragmented. So it's both things, bifurcation, fragmentation. The only response for Europe is to go ahead and integrate so that it has its own big market. We can't do anything else. It's not that, this is not science fiction. It is science. We need to do this as soon as possible.
Well, Alicia, strong words of warning there for Europe in terms of getting more integration and coming closer together to deal with what are major changes in global trade. Thank you very much for talking to us this morning. Alicia Garcia-Herrero from the Natixis Investment Bank.